Hello. Today in less than 5 minutes, K&G International Advisors will give you a summary of last week's most important international financial news, focusing on the current opportunities in travel stock. Consumer spending faces multiple headwinds in 2022. Even after we factor in rising interest rates, the highest inflation since the late 1980s, a slowing global economy, and the largest war in Europe for 80 years, which further adds to the weight on consumer confidence. But there are definitely bright spots for investors to focus on. Some sectors of consumers and business spending stand out, offering continued structural growth in demand despite the already mentioned headwinds to demand. One of such cases is traveling spending. Both business and leisure travel were cut off dramatically in 2022 in the face of COVID-19 pandemic, and neither has recovered to anything like demand levels seen in 2019. While most areas of business and consumer spending have seen strong demand recoveries, the continued COVID-19 restrictions around the world on travel has meant that the global travel recovery never really showed up. After more than 2 years, the industry is set for a dramatic rebound. Pent-up demand is a difficult thing to measure, but we think that all of our viewers would agree that in respects of travel, it is certainly there. Early predictions of the end of business travel replaced by Zoom meetings were premature. Most airlines now are predicting business travel, when allowed to return, to recover to levels above 2019 demand very quickly as clients and suppliers rush to reconnect. Leisure travel is already rebounding strongly. Meanwhile, the newfound ability to work remotely is actually encouraging more travel. Many are choosing to temporarily live in different cities and countries while they work, increasing demand for temporary accommodation, flights, etc. Stocks in the sector are already reporting very strong results too, which indicates that a strong rebound is ahead. The broader business and leisure travel industry is a good example of why, even in volatile markets, opportunities remain for investors to invest in, particularly those investors with active mandates. While indexes and broad markets, ETFs, may remain under pressure, specific sectors and companies with unique characteristics and valuations continue to offer exciting opportunities to invest. Travel was, before the pandemic, a structural growth industry, and we expect that to be the case again post-pandemic. This is a sector in which Dominion has been rebuilding investment positions since 2021 in anticipation of the full post-COVID recovery. Some of the examples could be aircraft leasing companies, online booking platforms, hotel operators. These and many other businesses with exposure to these recoveries in travel spend are likely to continue to stand out in 2020 and 2022. The sources that we used on today's video were Yahoo Finance, Bloomberg, and Dominion. My name is Juliana Lato from K&G International Advisors, and we wish you an excellent start of the week. Also, we'd like to thank you for watching our video. Don't forget to subscribe to stay updated on all the important financial news, and don't hesitate to contact us if you have any queries or further comments.